Good morning, MJ traders and investors. It's Rod with Power Group. Welcome back on the Pursuit of Wealth. It's Monday, June 6th. Happy Monday. Hope you're well. Hope you had a great weekend. In today's video, going to go over Canopy Growth stock, ticker symbol CGC on the NASDAQ. Quite a few requests over the last couple of days to give an update on the technicals. Thought I'd come on and do a quick video. Before we get to it though, make sure to smash the like, subscribe to the channel, tick the bell to be notified on any future updates. First and foremost, technicals right now are not really the most important. As we know, we've been in a brutal bear market for the last couple of years. It's been a rough couple of years in the MJ space. It's not just Canopy, it's all of Canadian MJ, it's American MJ, it's the retailers, it's the ETFs, right? We need something like safe banking, in my opinion, that's going to completely ignite the sector, right? Lift us out of this rut that we're in. Bears are still in full control, and it's all about bulls proving to us that we're setting these bear market bottoms, and at the moment, we're just not seeing it. We need to be confident in a bear market bottom being set is confirming weekly and monthly uptrends, and we're still a long ways away from doing that. We're in a weekly downtrend at the moment. You can see here we have the high, low, lower high, lower low, lower high, lower low, lower high, lower low. Again, until we confirm weekly uptrends with a low, high, higher low, and higher high, we're not confident in the bear market bottom being set just yet, right? And we need something like safe banking, which I think has about a 70% chance, if not higher, of passing before the end of this year. We know that Amazon and Apple are backing it as well. I know I'm repeating myself from a lot of other videos, but it is important. I do think that this time is different, but we have to also remind ourselves that the broader market is teetering on the brink of a bear market as well, like the S&P 500, also tech sector and crypto, which have been very correlated to one another. We usually see a bit of a summer lull, meaning where the activity drops off in terms of MJ. That has happened for the last several years, and I know a lot of people are saying, well, this time might be different. Well, we can't really say that until it's different, right? So until things change, we're just going to assume it's going to be more of the same, right? So I'm thinking that we could see a bit of a relief rally here. We're likely due for a relief rally in the broader market as well. I'll bring up SPY here in a moment, what I'm looking at there. But we've been very correlated to the broader market. We know that if the broader market were to see more downside, MJ is not positioned well at all. So I do think that we're going to see a bit of a relief rally soon. We know that Amazon, Google, Shopify, and Tesla all have stock splits coming up. And this happened back in the .com days as well, where we had a lot of those big tech names that were in that tech bubble. They split right before the top of the broader market in the tech sector there in the rise of the .com days, right? And similar thing happening now where we're going to see these stock splits, and I think that's going to bring a lot of bullish momentum back into the space, and that should bode well for MJ stocks as well. But again, we need to see the broader market see a relief rally, which I think is going to happen. That will likely translate into a relief rally in the MJ space. But we can't lose sight of the fact that if the broader market starts to roll over into the next couple of months, it's entirely possible that MJ struggles over the summer, which it has usually done in the last few years, and then maybe a run up into elections into the fall, which we know is in November in the US, which typically is a bullish season. We know that things are cyclical, they're seasonal, and generally the fall is usually a good time for MJ as well, right? And usually the beginning of the year. So I think that once crypto and stocks top out and enter their bear market, we're very close at the moment, but I still think that we're just in a bear cycle in a bull market, in the broader market, and especially in crypto. So once crypto and tech sector start to top out, I think that's going to give way for MJ to really set its market bottom and then bear market bottom and then enter a new bullish cycle in a new bull market. I think that we need crypto and tech stocks to top out and enter a bear market before MJ is really going to enter a new multi-year bull market, which is what I'm looking at until I'm not. But we'll take a look at the chart here before we look at the S&P 500. Again, we're very correlated, so I'm watching that. I'm watching the DXY, the dollar index as well, which is starting to break down a little bit, which is a positive sign because we know it's inversely correlated to our broader market and assets. And if we take a look at the weekly time frame here on CGC, we do have some hidden bullish RSI divergence, which just means we have weekly lower highs and lower lows on the price action. We're trending lower on the price action, but the RSI is trending with a bit of a higher low and higher high pattern here at the moment. So that is some glimmer of hope for the bulls. We're still in a weekly downtrend though. You can see here that we have the high, low, lower high, lower low, lower high, lower low. We need to change that weekly trend. We know that we're not going to be confident in a bear market bottom being set until we confirm weekly and monthly uptrends. So what we need to see is a bounce on the weekly, which just means we're breaking the high of the previous weekly candle. We come down, we start weekly consolidation, we form a weekly higher low followed by a weekly higher high. That'll give us our weekly trend change, and that will be a great step for the bulls. But then we need to change monthly trends as well with a monthly high, higher low, and lower high, or higher high, sorry. So if we can get that low, high, higher low, and higher high, confirm that monthly uptrend and the weekly uptrend, that's going to give us absolute confidence that the bear market bottom is in and that we're entering a new bull market. I think that based on how much we've been just completely destroyed over the last really several years since the legalization happened in Canada, we've been basically in a bear market since then, right? We had this huge move about a year and a half ago in February of 2021, where the whole sector just ignited, and we know that the broader market was extremely bullish as well, and was just catching up to the rest of the broader market. But again, just a brutal bear market that we've been experiencing over the last year and a half. I know it's been rough, but I do think that the next time we confirm weekly and monthly uptrends, that is going to be the time where we enter a new bull cycle based on how beaten down we've been for the last several years. And something to keep in mind as well, the monthly RSI is at levels not seen since 2015. And also the price, with a low here at 430, we did close at the low of the week last week, so we, in theory, could see a little bit more downside this week. But we are starting to see some bullish signals in the broader market, which I'll bring up here in a second. But essentially, you're able to buy at prices not seen since 2017 and 2016 as well. So in my opinion, a great time to start loading up. Personally, full disclosure, I don't own any CGC at the moment. I have it through forms of ETF exposure, but that's pretty much all at the moment. I knew that I always thought that CGC was going to have a lot of problems based on them saying that they weren't going to be profitable for another couple of years. It might even be 2024, 2025 before they turn a profit. We know that BNN Bloomberg also stated that Tilray and Hexo would likely be the first to profit among the tier 1 LPs, while the rest would likely take several years later. And that so far has reigned true, right? And something I want to point out here as well is the weekly time frame. We have yet to confirm the weekly uptrend. Back here, we got above weekly EMA 12, which has been resistance ever since we lost it from the highs of February 2021. You can see here we had a bear cross, which just means the shorter term time frame EMA 12 was crossing downwards through EMA 26. That's called a bear cross. And then we saw more downside ensue, right? So we had the lower high and lower low. We confirmed a weekly downtrend. We had the weekly bear cross, and now we just cannot get above EMA 12. We did it once here, and it ended up being a bull trap. And the reason why we should have been skeptical back here and not just enter based on that, right? We could have said, well, we haven't closed above EMA 12, and a lot of people might have said, well, I'm going to enter here because we finally closed above it after many months of downside and failing to close above it. But the difference is here is we were in a weekly downtrend. We didn't confirm a weekly higher low and higher high. So at the moment, what I'm going to be looking for is a weekly uptrend and a close over EMA 12. So if you're wondering when we're going to see a potential bottom being set, watch for that to occur. Watch for a weekly bounce to get underway, a higher low and a higher high. If we confirm the weekly uptrend and a weekly close over EMA 12, which is currently sitting at $5.98, then I think that's going to be a huge bullish signal, and a lot more upside is likely going to come as a result. And on the monthly time frame, once this monthly bounce does get underway, we have essentially no resistance on the monthly up till about 1596 in terms of price action, and EMA 12 sitting there at $10.22. I think we could see a hard and fast move on CGC and specifically MJ as a whole. If we get any bullish catalysts like safe banking, progress, that would obviously ignite the sector, and we could easily see from current levels, in my opinion, we could easily see a bounce of about 100 to 200% just to get to that weekly EMA 12, right? Monthly EMA 12 there on CGC. And again, on the weekly time frame, just to see EMA 12 on the weekly, that's about over 40% bounce from here. And something I'm looking at as well on the S&P 500, this is the futures chart. If we take a look at the futures, you can see here it's currently a daily bull flag that is forming. And if we just take the measured move of this bull flag, you just take it to the 0.32, you take the low to the high, take that measurement and go from the 0.32 Fibonacci, and then takes us to a target. And I'll just put the line here so everybody can see. I usually do a horizontal ray, and you can see that would take us up to about 440 on SPY futures. If we take a look at the actual SPY chart, that would take us to about 435, I believe it is. So we'll just take a quick peek. 434 is the target on on the actual S&P 500. Keep in mind the futures doesn't take into account dividends and things like that. But at the moment, it's looking like the broader market could see a bit more upside. We need to be careful, though, if the broader market does see further downside from here, which is entirely possible. We could just range out. We still haven't confirmed a weekly uptrend. We're still in a weekly downtrend as well on SPY. And we do have the potential this week for a weekly higher low to form compared to the low here at 380.54. And if we do see the higher low and higher high change that weekly trend, that's going to be good for MJ as well, right? We want to see all systems go, and we want to see weekly, monthly uptrends across all sectors. And taking a look at CGC, we're still bullish on the MACD, and it has been trending higher for the last several months, and that is a bullish sign as well. But again, stochastic had a bear cross. We're still below the 10-week moving average there at 588. In terms of the weekly moving average, we have nothing nearby until the 50 weekly at 1149. So like I said, once we do see a move, it's likely going to be a hard and fast move to the upside. The 50-day moving average is there at $6.12. So I expect, like I said, at least a move of about 20 to 40% if we do get the weekly bounce underway. That's what I'm going to be expecting. Again, we need something like safe banking, though, that's going to ignite the whole sector and sustain these rallies, right? We need something that's going to help us sustain these rallies, and we need something that's going to completely shift the whole sector, right? We know that we're bearish in south, north of the border, retailers, right? So in order to see that macro level reversal, we're likely going to need safe banking, and that's going to help us sustain that rally. And again, we're going to be watching for weekly and monthly uptrends to confirm. With that, going to end the video there. If you could smash the like one more time on your way out, I would appreciate it. And tick the bell to be notified on any future updates. Thanks so much for joining us again on The Pursuit of Wealth, and we'll see you in the next video.